Hey everyone, Eddie Campos here with RE/MAX Preferred Associates, and this is Coffee with Eddie. We're here at Union Home Mortgage. We're going to have a conversation with Cheryl Carroll to discuss what's going on in the mortgage industry and seeing what's happening with interest rates. Hey everyone, it's Eddie Campos here with RE/MAX Preferred Associates. We're back with Coffee with Eddie. It's episode 56. We're here with Cheryl Carroll with Union Home Mortgage. And Cheryl, I've touched on this in episodes previous to this, appraisals. When I go on a listing appointment, I provide a market analysis to be able to help people decide where is the most accurate pricing for that home. One of the things I always strongly encourage is for them to get an actual appraisal so that you know what the exact number is. Sometimes we end up with appraisal issues on a mortgage. We've got the home listed for $200,000. We negotiate an offer of $195,000. Lo and behold, the appraiser comes back and says the home is worth $190,000. When things like that happen, how do those get resolved? What does the lender want to see happen?
Well, a bank can only lend on the appraised value or the purchase price, whichever is less. So that's the issue, right? Is that we're less than the purchase price. So the options that are available, the first thing that I do is I contact the buyer's agent and I say, I'm going to call the buyer. I need you to know this because they're going to be calling you next. Your options though, one, accept the appraisal as it is, and either the seller comes down on their purchase price to $190. The seller doesn't come down on their purchase to $190, and the buyer can pay the additional themselves.
So when you say they pay the additional, they pay it in additional in their down payment.
In their down payment. So they'd add $5,000 to their down payment.
Got it.
Or we can do a reconsideration of value. Reconsideration of value, typically the buyer's agent and the listing agent, they work together. They come up with additional comparables maybe that weren't used. They fight, they argue their case. Why should this be
challenge it and renegotiate.
And renegotiate with the appraiser, right. So that would be step one outside of those first two options. So that doesn't work. If we can find material defect in the appraisal, you have the option to have a second appraisal done. So it's not a completely dead deal. There's 4 right there options that are available if that does happen.
So it does make things a little more complicated when you're in the middle of the process. I mean, everybody's feeling good. The realtors are happy. We made something positive happen for our clients. Everybody thinks we're going to go to closing, and all of a sudden there's a little oil in the ointment, and we got to figure out how we're going to get this resolved. So much more important for people to consider how they're going to price their home when they have it listed right to begin with.
Absolutely, because there are always appraisers. Typically, they say don't look at it, but I think they do. They look and see where was the house price and where is the purchase price. Where is that? They use comparables, and they use adjustments according to the comparables that they're using. But I do think that they look, and if a house was way overpriced, for example, that's in the appraisal.
Well, I know, for example, in a certain situation I had recently, that they also look at, was it a competitive situation? Were there multiple offers involved? Because that in itself is dictating what the market will be willing to pay, correct?
Right.
Well, this has been Eddie Campos with RE/MAX Preferred Associates. We've been talking about appraisals today and how they affect your ability to be able to get a mortgage and buy a home. Please come back and see us again next month.